Okay, let's dive right in. This deep dive is specifically crafted for you, exploring the incredible, sometimes head-spinning world of real estate investment in Los Angeles.
That's right. Our goal here is really to get straight to the core of it, unpacking the key factors that make LA such a powerful market for investors.
Understanding the essential dynamics at play.
Exactly. And highlighting the crucial things you need to consider if you're looking at opportunities in this area.
We're going to look at everything from, how quickly properties move, how much they tend to grow in value,
Uh-huh.
to the real costs you need to account for, the strength of the rental market,
Yeah.
and even point you towards some specific neighborhoods where the action is happening.
It is a complex market, no doubt, but we're going to help you see the underlying structure and, hopefully, the key opportunities.
All right, let's unpack this LA market then. It definitely has this reputation for being fast-paced and highly sought after. What does the data actually show? How quickly are properties selling right now?
Well, looking at recent performance, properties in LA are typically spending around, say, 45 to 60 days on the market before going under contract.
Okay, 45 to 60 days.
But that's really just an average. You see significant variation properties can move much, much faster, often like under 30 days in areas undergoing rapid change. Think Highland Park or El Sereno.
Wow, under 30 days.
Yeah. Then on the flip side, in the very high-end luxury segments, Beverly Hills, for example, they can sit for longer, sometimes 90 days or even more.
So that speed or lack of it, depending on the area, is a critical factor depending on your investment strategy.
Oh,
If
absolutely.
you're thinking fix and flip, that 45, 60-day average, or maybe even faster, is key.
Exactly. The potential for quick turnover is a major draw for investors focused on renovation and resale. It means your capital isn't tied up for, excessive periods, assuming you execute the renovation efficiently, of course.
Right. And beyond just moving quickly, are properties actually appreciating consistently in LA? Is it still that market where values just seem to, well, keep going up?
Historically, yes. I mean, over the past decade, LA has shown really strong, consistent depreciation rates. We're talking averaging in the range of 6% to 8% annually.
6 to 8%. That's pretty solid.
It is.
That kind of steady growth is definitely attractive, particularly for those looking at longer-term buy and hold strategies, not just the quick turnaround.
Absolutely. It provides a robust foundation for wealth building over time. You get that potential for significant equity growth alongside the rental income.
So what's driving that? What makes LA's property values climb like that?
It's a few fundamental forces, really. First, there's this perpetual imbalance between limited housing inventory and just tremendous demand. They simply can't build enough new homes to keep up.
You hear that a lot.
Then you have a powerful and incredibly diverse job market. Think entertainment, obviously, but also the burgeoning tech scene, Silicon Beach,
Right.
aerospace, global trade through the Port of LA. This diversity creates stable employment, which supports housing demand. You also have significant international investment drawn to the city and, frankly, geographic constraints. LA is sort of hemmed in by mountains and the ocean. You can't just sprawl endlessly.
That makes sense.
That natural scarcity is a fundamental driver of value.
That geographic limitation is huge. Okay, so we understand the potential for quick sales and appreciation, but what about the costs? Investing isn't just about the upside, is it?
Absolutely not. You have to factor in the expenses, and in LA, they can be significant.
Let's talk about insurance, for example. What should an investor expect? Ballpark figures.
Well, the average annual cost for homeowners insurance in LA typically falls somewhere between, say, $1,200 and $1,800.
Yeah.
However, location plays a massive role here. If a property is situated in a high-risk fire zone, like parts of the Hollywood Hills or Malibu, well, that annual premium can easily exceed $3,000.
Wow, so just based on location, you could be adding thousands to your annual expenses.
Precisely. And lenders almost always require comprehensive insurance, so these costs aren't optional. They're an essential part of calculating your potential cash flow and, understanding your loan-to-value ratios.
Which is basically how much the lender's financing versus the property's value.
Exactly, how much skin they have in the game versus yours.
And LA is famous, or maybe infamous, for its high cost of living. How does that pervasive expensiveness impact a real estate investor?
It impacts pretty much everything. LA's cost of living is roughly 50% higher than the national average.
50%.
Yeah, and that trickles down to all property-related expenses. Construction costs, renovation budgets, property management fees, routine maintenance, the cost of labor for repairs, it all carries a premium.
So you're just paying more to operate, period.
You are. But here's where the LA math gets interesting. While your expenses are higher, the market also supports significantly higher premium rents and offers that strong potential for appreciation we just discussed.
Oh,
So for many investors, the higher returns actually justify those increased operational costs. It's a different cost structure than, say, investing in the Midwest, but the potential reward is often higher too.
that makes sense. You really have to look at both sides of the equation.
Speaking of returns, what about investors looking for steady income? How robust is the rental market?
LA has one of the strongest rental markets in the entire country. Demand is consistently high, driven by the sheer size of the population and the significant portion of residents who rent rather than own.
Right. Can you give us a ballpark of typical monthly rents?
Sure. For a one-bedroom apartment, you're generally looking at maybe $1,800 to $2,500 a month.
Yeah.
Two bedrooms usually command between $2,500 and $3,500.
Uh-huh.
And for a single-family home, depending heavily on size, condition, location, rents can range from $3,000 up to $5,000 plus per month.
Those are substantial numbers.
They are. And for investors, especially those acquiring properties to renovate and hold as rentals, these robust rates offer really significant cash flow potential.
And that cash flow is critical. It's critical not only for covering expenses, but also often for enabling them to qualify for and refinance into more conventional long-term loans after the property is stabilized.
Okay, so strong cash flow potential from rentals is a key piece. With all of this in mind, the speed, appreciation, costs, and rental demand, where should an investor looking at LA actually, focus their search? Are there specific areas offering more opportunity right now?
There are definitely strategic neighborhoods attracting investor attention. South Los Angeles, for example, is an area seeing considerable gentrification,
Okay.
which often translates to lower initial entry points, but significant potential for appreciation as the neighborhood evolves.
And for those maybe looking for something a bit more established but still with good potential, what about that?
The San Fernando Valley often provides more affordable entry points compared to, say, the West Side, but it still benefits from steady rental demand driven by families and professionals seeking a bit more space.
Right, the valley.
Right. And East LA, with its emerging art scene and cultural revitalization, is attracting younger professionals and seeing increased interest.
I've also heard areas like Inglewood mentioned a lot recently, especially with the new stadium and all the development.
Oh yeah, Inglewood is definitely on the map.
And places like El Sereno, Boyle Heights, West Adams.
Absolutely. Those are all areas identified as, well, ripe for fix and flip projects due to their housing stock, or areas experiencing significant appreciation as the city's growth kind of expands outwards. Each offers a slightly different flavor of opportunity, from value-add renovations to riding the wave of neighborhood transformation.
So, stepping back from the specific numbers and locations for a sec, what is it about LA fundamentally that makes it such a magnet for real estate capital? Why here?
At its core, I think it's the sheer scale and dynamism of the market. You have a metropolitan area with nearly 13 million people and consistent population growth.
That's huge.
That creates persistent, surging demand across all property types. It's just a massive built-in demand pool.
Yeah.
And underpinning that is the economy. Unlike cities reliant on just one or two big industries, LA's economic base is incredibly diverse: entertainment, tech, trade, aerospace, tourism, fashion, you name it.
That diversity is key.
It means greater resilience during economic shifts, which translates into more stable rental demand and more reliable property appreciation over the long term. That stability is crucial for risk mitigation.
It really is.
So when you combine that economic stability with the historically strong appreciation potential we talked about, the high rental demand, remember, like 54% of the population rents,
Yeah.
and the continuous opportunity to add value through renovating older properties, you have a very compelling environment for investors.
And all of that is fueled by what makes people want to live in LA in the first place, right?
Yeah.
The lifestyle draw.
Exactly. People are drawn by the lifestyle, the world-class amenities, the beaches, mountains, cultural institutions, the food scene. There are deep and varied career opportunities across those diverse industries. And don't underestimate the impact of its educational institutions. Prestigious universities like UCLA and USC create significant demand for student and faculty housing in specific areas. It's sort of a cycle where appeal drives population, population drives demand, and demand drives opportunity.
It truly is a powerful combination of factors. Looking ahead then, what does the future hold for the LA market? Are these trends sustainable? What do you see?
Well, several factors point towards continued growth and opportunity. There are massive ongoing infrastructure investments.
Like the metro expansion.
Exactly, expanding the metro transit system, modernizing LAX. These projects often significantly boost property values along transit corridors and surrounding areas. The tech sector in Silicon Beach continues its rapid expansion, attracting companies and, importantly, talent.
And the 2028 Olympics are on the horizon, too. That has to have an impact.
The Olympics always bring another wave of infrastructure improvements and global visibility, which historically gives property values a lift. Plus, a bit more speculative. But as climate challenges affect other regions, LA's relatively moderate climate could potentially attract further migration, adding to that demand pool.
So, quite a few forces pointing towards continued market strength, it sounds like.
They certainly contribute to ongoing population growth and housing demand, which are really the bedrock of the market's future.
Now, navigating a market that's this fast-paced and competitive requires navigating financing effectively. How do investors typically handle that in LA? It can't be easy getting traditional loans quickly enough sometimes.
That's a really good point. Given the speed required to secure many opportunities, especially those needing quick closing, like off-market deals or properties needing significant work, well, having access to fast, flexible financing is absolutely essential.
So is that where things like hard money loans or private money loans become particularly relevant?
Exactly. Traditional bank financing can often be too slow and too inflexible for these types of competitive, time-sensitive deals. Hard money and private money lenders can provide the necessary capital quickly, often focusing more on the asset's potential value rather than needing the borrower's entire life story documented.
So they're not just for fix and flips, even though that's often what people associate them with?
No, not at all. I mean, while they're crucial for flips, these financing methods are also vital for investors looking to acquire properties quickly for rental purposes, especially if the property needs renovation before it's rent ready, or like you said, before it can qualify for conventional financing.
Right.
It allows them to acquire, renovate, stabilize it, get tenants in, and then refinance into a lower rate long-term loan. It's a key tool for unlocking various strategies in a competitive market like LA.
Okay, so it sounds like understanding these financing options and having the right capital partner is just as critical as understanding the market itself.
It's an absolute critical piece of the puzzle. Access to flexible capital gives you the ability to actually act on the opportunities you identify. Without it, you're just watching from the sidelines.
So we've covered a lot today: the fast pace and appreciation potential of the market, the reality of the costs involved, the strength of that rental income side. We pointed you towards some specific neighborhoods, discussed the diverse economy and broad appeal driving demand, and even touched on factors shaping the future.
Yeah, it's a comprehensive overview.
Hmm.
And understanding these nuances, really getting how they fit together, is absolutely key to successfully navigating and capitalizing on the opportunities available in the LA real estate market. And as you just mentioned, finding the right partners, whether it's local market experts, good contractors, or financing providers who truly understand the LA dynamics, that's essential for turning knowledge into successful investment.
So for you, listening and thinking about this market, what stands out? What resonates?
Maybe a final thought to leave you with. Considering LA's diverse, resilient economy and these massive ongoing investments in infrastructure, particularly expanding transit, how might focusing your search on specific properties or maybe even micro areas along those new or improved transit corridors unlock unique long-term opportunities? Opportunities that might not be immediately obvious when you're just looking at broader neighborhood trends, something to consider as you continue your exploration.